Internal Revenue Service IRS tax news. Treasury Department and IRS issue guidance for consolidated groups regarding net operating losses. IR 2020-138, July 2nd, 2020, Washington. The Department of the Treasury and the Internal Revenue Service today issued proposed regulations. There's a link to those proposed regulations here, and temporary regulations, also a link to them here, that provide guidance for consolidated groups regarding net operating losses, otherwise known as NOLs. The Tax Cuts and Jobs Act, TCJA, and the Coronavirus Aid, Relief, and Economic Securities Act, CARES Act, amended the rules for NOLs, net operating losses. After amendment, the NOL deduction is the sum of the total of the NOLs, net operating losses, arising before January 1st, 2018, pre-2018 NOLs, net operating losses, that are carried to that year, plus the lesser of the total of the NOLs, net operating losses, arising after December 31st, 2017, or 80% of the taxable income less pre-2018 NOLs, the 80% limitation. The TCJA generally eliminated NOL, net operating losses, carrybacks, and permitted NOLs, net operating loss, to be carried forward indefinitely. The TCJA also provides special rules for non-life insurance companies and farming losses. Non-life insurance companies are permitted to carry back NOLs, net operating losses, 2 years and forward 20 years, and the 80% limitation does not apply. Farming losses are permitted to be carried back 2 years and carried forward indefinitely, subject to the 80% limitation. The CARES Act effectively delays the application of the TCJA amendments until January 1st, 2021. Additionally, the CARES Act permits a 5-year carryback for NOLs, net operating losses, including farming losses, and NOLs, net operating losses of non-life insurance companies for taxable years beginning after December 31st, 2017 and before January 1st, 2021. The proposed regulations provide guidance to consolidated groups on the application of the 80% limitation. Additionally, the proposed regulations would remove obsolete provisions from the rules for consolidated groups that contain both life insurance companies and non-life insurance companies. Because the CARES Act allows certain NOLs, net operating losses, to be carried back 5 years, the temporary regulations allow certain acquiring consolidated groups to make an election to waive all or a portion of the pre-acquisition portion of the extended carryback period for certain losses attributable to certain acquired members. For more information about this and other TCJA provisions, visit irs.gov/tax forum. There's a link, tax reform. There's a link to that here. Additional information about tax relief for business affected by the COVID-19 pandemic can be found on irs.gov. There's also a link to that here. There'll be a link to this in the description.